Hello, hello, and happy Friday. It's time for the Security Token Show, everybody. We're your hosts. I'm Herwig Konings, joined as always by my co-host, Kyle Sonlin. My guy, how are you today?
Herwig, I'm great, and this is a true story. I actually had a dream last night, and in the dream that I had, the Security Token Show theme song that we have to start the show here was like on repeat through my dream. So if that doesn't tell you how excited I am to get into another show, we're barreling towards 5 years of doing this every single week, and I wouldn't do it with anybody else.
Sleeping while you work, working while you sleep, I should say. That makes a lot more sense. Anyway, I love to hear it, Kyle. Shout out to, of course, Nick, Stefan, and everybody who helped make this beat and show. And of course, we've got an amazing week lined up. Huge news. We're going to get into it with the market movements, followed by, of course, a token debrief with the rest of the news and a nice little interview closing with our companies of the week. So, Kyle, you ready?
Let's get right into it.
Let's do it. And kicking off the market's big news this week, the talk of town is going to be none other than Fidelity International, the London-based asset management firm that's now leveraging JPMorgan Onyx's tokenized collateralization network for a tokenized money market fund. So it sounds exactly what it's going to be used for. The firm is going to be using a tokenized money market fund to post for margin for collateralization on their TCN. Of course, all powered on chain on their private permissionless Onyx blockchain. So, Kyle, what are your thoughts on this?
Well, money market funds are huge in the traditional capital markets right now because interest rates are so high. You wonder if at some point we're going to see the top of the curve on this type of product, especially as there's rumors that perhaps interest rates may or may not come down, especially with the changing potentially of a lot of the different political systems in the U.S., depending on the presidential election as well as the House and anything that comes up in Congress. So it'll be very fascinating to see how this changes over time. Certainly a high interest rate environment drives a lot of these money market product demands. And so if that's the case in TradFi, we're also going to see that in the crypto markets with the fact that stable coins continue to balloon in market value. You need to find avenues for real world yield for digital asset treasuries. If you're one of these banks, if you're one of these institutions that is either buying or selling crypto, you may not want to necessarily take your cash out of that crypto economy because you may know that you're going to come in at some point in the future. Therefore, you need a safe place to put your money that's not going to lose cash relative to the existing capital markets products. This makes total sense to me. Interesting to see Fidelity working with JPN. I think that it makes sense from a perspective of JPM already has a lot of the infrastructure built out, and Fidelity just wants to focus on their distribution and the products offering. But there is some level of competitive market intelligence here, right? Fidelity will have to presumably give up some of that information of their investor network, of the people participating, and some of these other components to JPMorgan. It will be fascinating to see how this grows over time. Is this just a relationship based out of convenience in the short term? Or is there some long-term competitive advantage of TCN outside of the success of adoption thus far? So that's, I think, the biggest storyline to watch over the next 2 to 3 years.
Yeah, I think you're right about the rates completely as well being a big factor here. I think that also led to some of the drive behind sort of the crypto markets participating in this asset class. But we also have to remember why we call them liquidity products. I think this will be another driving force of just creating these settlement solutions, these alternatives to cash out from, as you said, on-chain products, the crypto economy, the digital asset economy. And this is a building block. You know, this is where on-chain capital markets will be. You'll settle into these liquidity products and, of course, use them in this new capacity like we're seeing with Fidelity. Now, we see already prime brokerages like FalconX and others as well partnering up with Biddle to do similar functionality. So again, we're going to see this utility of money market funds, I think, grow dramatically compared to their TradFi counterpart. And it's interesting because it's, of course, with Onyx. On one hand, they have billions upon billions, maybe over a trillion, are on track for their repo transactions on their private permission ledger, right, on Onyx. But then we've also seen other use cases. Recently, we saw like a $10 million bond issuance with Quincy, the municipality in Massachusetts. So the size, or how much the use case, is this a proof of concept, or is this, being meaningfully used to a certain scale? We won't be able to tell without them publicizing that, because again, this is not on a public blockchain. So we won't easily be able to infer what kind of activity is happening behind the scenes with and Fidelity. But I'm really curious to see, it could really vary widely in terms of how they're utilizing this.
Spot on, Herwig. I think that makes total sense. And kicking it into our second piece of news this week, we have an Avalanche infrastructure fund that has been launched by a company called RNS. And so RNS is a new fund. Rise and Shine is what that stands for, Rise and Shine Partners. And they're actually going to be investing in the Avalanche ecosystem. So with an infrastructure fund, really what they're trying to do is buy Avalanche-based assets, the base currency or crypto ADAX, as well as some of the other assets that are being brought to market in the Avalanche ecosystem. You could also think about this a little bit like a liquidity fund, if you will, on the base layer of the Avalanche network by buying up some of that supply from either retail or traditional participants. And this is all being created by Oasis Pro, a friend of the show and a longtime industry vet. Oasis Pro Markets is their subsidiary that is a full broker-dealer ATS platform. They are going to be placing this fund on behalf of Rise and Shine, and they're trying to target a $5 million fund from investors across, I think it's global. It's certainly in the US. And it's $100K minimum to be able to participate, but this is an interesting way to get exposure into the Avalanche ecosystem in the same way that you see a Bitcoin ETF or someday, in the future here, the ETH ETF. This isn't necessarily an ETF itself, but it is a way to invest in a fund that gives you direct exposure into the Avalanche ecosystem. We love Avalanche. They've been very active in the security token industry, and they've been very supportive of us over the years. So shout out to Oasis Pro and Rise and Shine, as well as Avalanche, for bringing a cool product to market.
Totally think that's cool, Kyle. We're going to see more and more of these as, of course, we see the crypto economy continue to grow. We're still seeing a good cycle here. And of course, Avalanche is positioned itself pretty well across a variety of different sectors. So to your point, you're also going to get exposure to a variety, also different sort of infrastructure pieces to Avalanche. And so if you believe in Avalanche and its potential success, I think this fund obviously makes a lot of sense. It'll be interesting to see who ends up participating. Likely probably a collage of large whales potentially, and maybe some more institutional partners. We saw something similar in the past, right, with Avalanche's Blizzard Fund. They also had, different LPs and partners come into that, and actually they just invested in Security Token Group as well through the Blizzard Fund. So we love to see infrastructure funds come to market because we know they really do help build upon that. And a big win for Oasis Pro. They're becoming more and more active with their announcements. And new listings and offerings. So, very exciting to see Oasis Pro moving. I also was very excited, Kyle, about the news that Brickken came out with this week. We talked about them previously winning the PwC selection for their Scale Accelerator. Now they're in the news again because they've been selected to participate in the European Blockchain Regulatory Sandbox, aka the European Commission's, safe environment for you to be able to collaborate with the regulators while you operate your business, learn from them, obviously be able to do things the right way, knowing that it's being done the right way with the regulators' approval. And in this case, Brickken being a Spanish startup, will now probably be able to expand into more markets under the guidance of the European Commission in this sandbox. We've talked about so many times on this show, Kyle, why we love the sandbox model, right? It's something we wish the U.S. had because it is such a great way for regulators to learn what's happening with the market while being able to contain it. without necessarily the innovation going wild, if you will. And frankly, the U.S.'s approach, essentially what many are calling, legislative first, or enforcement first versus, having a conversation. That's there is no alternative. It's either you have to try to do things the right way. There is no sandbox for you to go to, and it's hard to have a conversation, despite the fact that they say they're willing to have a conversation. I think the U.S. would benefit so greatly if the SEC created some kind of a sandbox environment for all of these crypto and RWA companies to say, hey, we'd love to work with the regulators and tell you what we're doing. So big win for Brickken. By the way, they've tokenized over 200 million euro worth of assets, real estate, I believe, entirely. So that is no small number, Kyle.
Yeah, no, I want to echo your sentiment on the sandbox model. I think that this really does continue to pay dividends, and Europe has been very forward thinking with a lot of their legal frameworks and now creating these types of environments. It is really interesting to see how that may play out over long periods of time. Certainly for now, the US still has dominance because of how liquid the markets are and how prioritized that is in this space. So at least as a breeding ground to be able to prove out those concepts, it makes total sense for the EU to continue that domination in driving innovation. We've also seen similar things in other jurisdictions. So this is pretty exciting, and 200 million in assets is no joke.
Yeah, I mean, by the way, just to hammer that point home, this is why we heard Jenny Johnson, the CEO of Franklin Templeton. We heard Carlos Domingo in Congress, last week, CEO Securitize, talk about this recurring theme of there is going to be international arbitrage. Like there is an opportunity for other markets to gain an edge with this technology. They acknowledge, of course, the dominance of today's markets, but this is one of those weapons that can be taken against us to get market share, if you will. So again, I think it's very smart for Singapore. We've seen do this very successfully. We've seen a lot of other jurisdictions set up sandboxes in order to let their industry participate. So that's really cool.
Totally right.
We saw some news as well, a quick extension of Ripple and Archax.
That's right.
Their partnership back in 2022, I believe they announced that initially. A less appealing time to be talking about security tokens and real world assets. Since then, the Ripple actually acquired Medico. That was the custody platform that Archax helped spin out. So there's obviously a great relationship between the two firms here. And they've just gone ahead and said, hey, they're doubling down, extending their partnership, essentially dumbing it down to, we hope to onboard a lot of real world assets onto the Ripple X ledger in order to, tokenize them. So I think that's a great move. Of course, Archax is a leader in the UK, and Ripple is really starting to sort of march towards this theme that they will be a big player in RWAs. So yeah, I think it's great. Kyle, any commentary on this?
Yeah, I think this reaffirms the idea of multi-chain assets being the future of RWAs or investment products, or however you want to classify these things. The blockchains certainly matter in terms of tracking the provenance and automating a lot of the back-end processes, but blockchain to blockchain, inter-blockchain communication is so important because we know that a lot of these things in the Archax ecosystem have happened on Hedera, for example, and now we've got XRP working to build their ledger for tokenization. And these things all will work together. Clearly, that wasn't a big enough hurdle that XRP didn't want to get involved because it isn't necessarily an exclusivity type of thing. There is a lot of benefits to working with a lot of different blockchains that have different integrations and different standards of liquidity and all types of distribution solutions. That's really the way to look at this, right? If you have broker co-syndication in the traditional space, you may have blockchain co-syndication in the digital asset space. And I think that should continue to be embraced, and good on Ripple and XRP for not necessarily requiring exclusivity and these types of things, because it really does pool and block off liquidity. We've seen comments from different individuals at the Coinbase event that were also talking about how these kind of private closed blockchains end up fragmenting liquidity, and that can be a problem in a burgeoning new market. And I think that by a lot of the leaders that have led by action, they have not seen it the same way, and they've been trying to kind of interoperate between each other. I think that's a really good thing for the industry.
Of course, you're spot on, Kyle. And it is good to see them lead by example so that others can follow in their footsteps. And speaking of sort of getting in a little bit political here, because it is the season, we of course want to point out that Fit 21 is making moves. It's going to be heading to the Senate, so keep that in mind. However, you can voice your support in order to get that pushed through. I think that's going to be a key regulatory issue that can happen this year, folks. We can get some kind of regulation this year. The only way that can happen is by being loud about this. So do your part. But Kyle, that's the market movements. Shall we head into the token debrief?
I'm looking forward to it, Herwig.
Time for some more exciting industry news, starting with Bitcoin Suisse, which has billions in custody already and powers billions more in staking. And they've now announced a tokenized bond using Polygon. They partnered with Obligate to do this, to launch the over-collateralized bond, and it settles in USDC, and it's only available to accredited investors. But it's great to see Bitcoin Suisse tokenizing bonds, a trend we'll expect to see more of upon a successful offering, hopefully. And first Franklin Templeton last week, and now Republic this week as the latest firm to leverage Zero Hash's capabilities to integrate USDC payment rails. So expect to be able to buy into Republic RWA issuances with USDC thanks to this integration. And this week, also, Figure Technology announced Figure Connect. This allows originators to receive forward commitments from buyers, lock in active bids, control the loan pricing to balance profitability and volume, and deliver pools of loans into those commitments. This lines up with Figure's plan to upgrade the loan market infrastructure with on-chain capabilities powered by Provenance blockchain, of course, which already is powering billions in HELOCs for Figure and many more. And are you ready for a success story, folks? Oxbridge RE has reports that their Avalanche-powered reinsurance securities exceeded their return expectations. So hopefully that means they'll move more of their traditional business on-chain after this. And I discussed Ripple earlier about their partnership with Archax, but they are also getting into the gold game, everyone. This is thanks to a company called Melt, who's been tokenizing gold in the supply chain since 2020, but previously on Algorand. And speaking of gold tokenization, it saw a second announcement this week, this time by Solemn, which unveiled a protocol for a fully decentralized, permissionless blockchain for storing, trading, and transferring digital assets and gold between parties. Powered using the Dubai Gold Exchange. It's an interesting model to see here come on chain. I love to see it. And they're also based in our backyard, Miami. Nearly finished here. We also need to report that Singapore-based Shintai announced that they've developed on Base to offer an RWA issuance platform. This marking a continued trend of RWA companies heading to Coinbase's very own blockchain. And Coinbase also announced a new report highlighting Fortune 500s are moving on chain thanks to stablecoins, crypto ETFs, and RWAs as the motivation. So that's worth checking out. And finally, Legible announced a tax solution for RWAs, and that makes sense given their accounting leadership in the crypto field. And I'd be remiss not to also mention that the World Federation of Exchanges says fractionalization is the main benefit of tokenization, according to their report. That's a fun fact, and it's certainly a big deal. Lowering minimum investments for RWAs means more investors to reach, which leads to benefits with liquidity too. What a week, folks, but don't go anywhere. It's time for an interview with Brickken.
Fantastic. Well, thank you, Herwig. Thank you, Kyle. This afternoon, we're joined by Edwin Mata, CEO of Brickken. Edwin, how are you today?
Very good. Thank you very much, Jason, for inviting me to your show.
Absolutely. You guys have been in the headlines a couple times now in recent times, the most recent of which being that you guys were just selected for the European Blockchain Regulatory Sandbox led by the commission there. Can you tell us a little bit about what you expect to be able to do within the sandbox here?
Yes, of course. So the idea is obviously to build internal know-how, but also accomplish that we sit down with the regulator trying to explain our business model, which is quite disruptive. It's not just about the tokenization, but it's also about the abstraction of funds on chain, or how we can bring an equity, debt, or even transform the utility into equity. So all of these kind of like models is quite disruptive, and for us could be simple to understand, but for the regulators themselves or certain members is still quite complex. So we want to build that bridge for the better blockchain of tomorrow.
Makes sense to me. And I believe that Coinbase is a part of this sandbox, right? Working with the different participants. What do you hope to be able to work and collaborate on with Coinbase specifically?
Yes, so they're going to give us support at the tech stack, at know-how, because obviously they're quite a big institution. They're trying to further understand the tokenization of securities for obviously products of tomorrow. So we're going to be using the Base blockchain, which is the favorite, even though we're multi-chain here in Brickken, Base is our default chosen one. And we're also going to start implementing their smart wallets and see how we can further amplify the tech stack. They also running now some custodian tech that we're also interested in. So it's kind of like just also putting out there that, there's technology that can cover certain regulatory aspects, and maybe running in public chains is doable. We heard the other day Securitize CEO before the commissioner in the United States talking about, can you use public blockchains? By all means, the technology is already out there. It's just the fear and uncertainty that is not allowing us to better perform things that we want to do and make our clients obviously compliant with the regulations.
Makes sense to me. Yeah, no, 100%. I mean, the fact that one of the world's largest asset managers, the largest asset manager, BlackRock, is on Ethereum, a public blockchain, right? That gives a little bit of credibility, at least for using public chains on top of other examples we've seen left and right. Coinbase, I think, is a great partner for you guys. They are providing a lot of infrastructure and tools to be able to scale tokenization and have it move forward. The other headline that you guys were in recently was that you guys were recently selected as well as a PwC Scale Program participant. Tell us about that program and what your involvement will look like on that.
Yeah, actually, that was a very exciting moment for us because we applied for the digital asset and tokenization. So they want to also PricewaterhouseCoopers amplify their knowledge because they have clients already making requests or trying to understand how the digital asset scope is. Not just kind of like the cryptocurrency ETS, Bitcoin, Ethereum, which now everybody seems to be on top, but kind of like the next level, kind of like, hey, what other financial instruments are going to be running on chain, and how me as a family office, an asset manager, a financial institution is going to be affecting me. So just the fact that we've been having with them a lot of meeting with their clients, kind of like educating them. It's already opening doors, because in the most important thing that we have to do now, as we have been doing for the last year, is raise awareness, right? And establish that, hey, the world is changing, and now why don't you jump into what is going to be the future? Because I do believe financial markets are going to be running on chain.
Absolutely. So you guys are working with tech and infrastructure providers such as Coinbase. You'll be working with institutions through PwC Scale Program and regulators through the EU Blockchain Regulatory Sandbox. So for everyone that's watching, I mean, you guys are working with some heavy hitters here. Who is Brickken? You guys have tokenized over 200 million euros worth of assets. Tell us about what people can find on Brickken and what future plans hold for you guys.
Yeah, I think where we stand out is we leverage the compression of regulation, and we were able to adapt it to the technology, and we were able to create a plug-and-play solution. We're running it as a SaaS, where companies can really leverage our technology for them to tokenize in a simplified model, great user experience without the complexity. Oh, what is tokenization? We allow them to say, tokenization looks like this. You originate the asset on chain, you have distribution channels, you have the management of your investors, your assets, your treasuries. And through all this journey, we just give them the solution, and we're simplifying that kind of like conception as to what is tokenization. So that's where we really stand out, just by great user experience, but also being able to allow them to comply with the regulation at hand. And that's allowing us to move around the world, because right now we have deployed our technology in 14 different countries, and we're growing as we speak. So we're very much excited. And basically, I do believe that Brickken did a great job in understanding or pre-understanding how the assets could look in the future. And we have been working nonstop for over 4 years now.
Well, that's fantastic. I mean, you guys are really working towards making the tokenization process as easy as possible for issuers, potential issuers, to bring on new assets on chain, which of course we always want to track on stm.co here on the Security Token Show as well. So, we appreciate all the efforts that you're making. Do you have any predictions or insights into what you expect the tokenization industry to experience in, say, the next 12 months?
Yeah, so I think the growth has been tremendous starting. We saw an uptick around October, November 2023, as we started generating more leads. Obviously, we were shocked as to how much right now we're starting to generate. So the market is trying to test and say, hey, like we really have to perceive here what is happening, because this is quite interesting. So we got SMEs, we're working with some asset managers now. So I think I've never experienced this much growth in such a short term, because I started in 2020 and we had to build so much education and awareness on it that we were most likely like lecturers more than entrepreneurs, right? But now, since October to this month, so that's kind of like the span of 8, I would say even Brickken grow above 100% on the growth rate. We're growing every month. So what I'm saying is, like the Boston Consulting, the typical 16 trillion is going to be on the side. I mean, everybody knows that here. But me as a builder in the space, I got to say, like, I have no doubts that in less than a year, we're going to see the trillion already on the market. So we're going to be starting to grow at a very fast rate. And especially with the news of the BlackRock tokenization or all of these great things, the money market, I think it was from Fidelity, the heavyweights are starting to enter, which is giving the trust to the rest of the red players and say like, hey, we got to start playing in this field as well.
Makes sense to me. Absolutely. To your point about, the industry growing, it's really exponential growth that we're seeing as well on our end, just seeing how many assets are coming on, a lot more than we saw back in 2020. That's for sure. And you as a builder, by the way, since you're working with so many issuers, are there any certain asset classes that you feel are coming on chain faster than others, or that are more appropriate to bring on chain?
Yeah, absolutely. So I think we're starting to see like a pyramid growth, where we at the top were obviously stable coins, which was kind of like the most standardized, and I think is the best use case for tokenization. Money tokenized makes a lot of sense. Then we saw the treasury bills, kind of like state debt bonds, and it's kind of like, okay, perfect. And now we're starting to see riskier assets such as equity of companies or credit loans or revolving credits. All of these kind of like, we're in Web 2 or normal traditional instruments that are already placed there. Now we're starting to see a trend that they're starting to get on board the blockchain. For me, my appetite has always been about the riskier assets, so investment in startups or investment in real estate, and all of that kind of like starting to be placed on chain is making it more appetite. So once we start getting all of those financial instruments online, then the whole pyramid is done. So you got stable coins that can run the whole pyramid for funding, for accessibility and everything. Then you have corporate, very high-end treasury bills on chain. And now you have the rest of the financial instruments, which is where the trillions and trillions of euros are.
Fantastic. Lots and lots of opportunity. Well, in the name of opportunity and collaboration, if people want to work with Brickken to tokenize some assets and use your technology, how can they get best in contact with you or your team?
Thank you. Yes, so the best, our website, www.brickken.com. They can see our solution as a plug and play. They can even start using it on their own today. But if they need help and assistance, we're more than happy to onboard them and let them know the good things that rigging their assets on chains can make them have being more efficient, optimize certain scopes, and obviously reduction of costs, which is what we're trying to accomplish here.
Fantastic, Edwin. Well, thank you so much for coming on the show, sharing your insights and what we can expect to see from you guys, especially from these last 2 announcements. Really exciting stuff. And with that, everyone, we'll be transitioning on to the final part of the show, the companies of the week. Thanks, Edwin.
Thank you.
That was you right there. Absolutely. Now it's time for Companies of the Week, Kyle. It's our favorite segment. You know what it is. It's time for us to pick a company we thought made the biggest moves in this space and, of course, puts them in the running for Company of the Year. We've still got a nice, second half of the year to go. But this week we've got some entrants. So, Kyle, who'd you pick this week?
Herwig, I wanted to give a shout out to a company that's been active in the space, has been passionate about tokenizing the world, and just got accepted into the regulatory sandbox for the European Blockchain Association, the European Commission, excuse me, and that is Brickken. Brickken is a Spanish startup. They have $200 million in tokenized, or 200 million euros, excuse me, in tokenized assets. And they are now into this sandbox environment, which is a huge stamp of regulatory approval, but it's also a great way to drive adoption because they're going to have the opportunity to explain their business model, explain their technical practices to some of the biggest decision makers in the government, as well as it's a great way to work with larger institutions that are going to feel more comfortable that they're operating in a safe and compliant manner. So for that reason, I did want to shout out Edwin and his team at Brickken for doing everything the right way with respect to their startup. Shout out to Brickken.
That's a fantastic choice, Kyle. Makes a lot of sense. They were on a roll getting selected by PwC as well, further signaling their traction and success. And of course, this is only going to help them learn and get access to other markets, which is going to help them grow. So that's one of the advantages of Europe sort of being tied all together like that. And looks like Bricken's going to roll full steam into it. So congratulations to Brickken.
That's absolutely right, Herwig. And how about you?
Well, that's a big deal, especially because this is Fidelity International. The fact that they have now entered into the space, you now have BlackRock, Franklin Templeton, and Fidelity International as major asset managers in this space. It's very cool to see. And it's a great use case. This is the fact that it's not just another sort of money market fund or treasuries product, but actually being used for collateral purposes on Onyx's TCN with JPMorgan. That is a big deal. We haven't seen too much news lately out of the TCN example. As I said earlier in the show, I'd love to see how Fidelity International leverages this. Like, are they just doing a test case, or are they really starting to say, hey, this is our future sort of part of our business, and we're going to start doing this in large size? That's going to mean a lot regardless. Congrats also to, of course, Onyx, who is just firing on all cylinders as well. But Fidelity International, I appreciate your big step here into the space. So love to see it. You're my company of the week.
Yeah, a great company using our previous company of the year winner, JPMorgan, to leverage their TCN and bring new tokenization products to market. That's what we call trickle-down innovation. Shout out to both teams getting involved here.
Yeah. Well, Kyle, that's our show this week. Everybody, we hope you enjoyed. If you did, give us that like, give us that share, that subscribe. We'd appreciate it big time. But in the meantime, while you're waiting till next Friday, where we'll be back again, go to stm.co. We've got it all the latest, hottest RWA trading activity, all of the latest bonds and debt offerings, as well as equities in the market across all the major markets. You can get that info there, as well as Security Token Prime, our research community. Come check it out. There's a lot of good stuff in there. And Kyle, we've got some pretty big news coming out soon about Tokenized this. So stay tuned, everybody, but that's all I'm going to say for now.
Ooh, it smells like success.
It's got to be, Kyle. I hope everybody has a great weekend and happy tokenizing.